Good afternoon, everyone. It's Wednesday, the 11th of July, 2012, and the market closed. S&P was up 2 pennies. The rest of the market was down a little bit. But let's take a look here. We're trying to hold above that slightly declining 50-day moving average and right at that 20-day moving average as well. You can see we finished at 134.16. The 50 is at 133.80. The 20 is 134.31. So we're kind of in between the 20 and 50 day. The 20 is above the 50, and that 50 can flatten out in here, basically giving us more of a neutral type of environment. If we take a look at this 30-minute time frame, I was kind of playing around with some stuff in here earlier today, and let's just get rid of that as well. But we've got this trend line that's just below us, down at about 133. 133 is also this level that we had observed yesterday. So right now, our first level of support is about 133.50 basically has held today, but we do have, of course, this little resistance, which is acting as this prior support, which is acting as resistance right now. And I think you've got to see it get above 135 and stick there for this market to be able to turn back around. And if it was able to do that, then perhaps we get a bounce off of this. We're in this channel basically right now, this that we're looking at, and we're to the low end of it, obviously. So if we take a look at it like that, we're in this nice neat channel and we're at the low end of it. We've got a 20 and 50-day moving average, so that's telling us that perhaps we find a little bit of support in here. We can also take a look at a couple Fibonacci levels. First one would say off of the low that we saw middle of last month, that we've come down basically 2/3 retracement. So let's just clear this other stuff out of here so we can see it clearly. But there we can see we've pretty much nailed the 61.8% retracement of this move right here, from this low to this high. So we've pulled back 61.8%. That's also a prior level of resistance, and basically the location of the 20 and 50-day moving average. So those are telling us, hey, maybe it could turn in here, but the evidence is not there until we see this market get above and hold above at least 135. The other observation I wanted to make with Fibonacci was that if we see the 135 level continue to hold as resistance, and we do still have a declining 5-day moving average is telling us guilty till proven innocent, that we could then see the S&P 500 maybe go on for a bigger retracement of this channel within this channel basically. So if we take a look at, here's our channel that I guess I can't draw down in there, but here's our channel, and we're here's the midpoint of it. We're down at the low end of that channel, and from this low back in June to the recent high, we've currently retraced 31.8%, 38.2%. So there's another reason to think maybe this, maybe some people are looking at the 31.8% retracement level from the June lows. Other people are looking at the 61.8% retracement from the middle of the month lows. So we've got this level that's holding for now, and if it fails, the trend line breaks and this support breaks, then I think that our next objective would likely be, first we'll close this gap, but I think the more the bigger level would be about 132.40, where we have a 50% retracement, and then we could see all the way down to 131. And right now we have to assume, because we have a declining 5-day moving average and we do still have a pattern of lower highs and lower lows, we have to assume that the market remains guilty till proven innocent. And I hope that was clear enough. We did see a little bit of end-of-day buying in here today. They got it back above the volume weighted average price. Kind of a really strange volume in here today, just real slow up till about 2 o'clock when we saw this sell-off, then quiet, and we got another surge of volume at the end of the day. So I'm not sure what to read into that, or that I would read into it. Just be aware of the key levels more than anything. NASDAQ was down 0.5%, and again, this market is a little bit more deeply damaged than the S&P 500, and again,